Johnson & Johnson, Investment Analysis, a comprehensive financial analysis and investment recommendation comparing J&J's stock and bonds. Executive Summary Company Profile. Johnson & Johnson is a globally diversified healthcare leader operating across innovative medicine and med tech sectors, distinguished by consistent dividend payments and an AAA credit rating. Stock valuation. J&J's common stock appears undervalued based on P/E ratio comparison against historical averages and industry benchmarks, with strong growth catalysts from recent earnings. Bond valuation. J&J's non-callable corporate bonds are deemed properly valued, with yields reflecting the premium investors accept for J&J's pristine AAA credit rating and non-callable security. Investment recommendation. An investment in Johnson & Johnson common stock is recommended over its bonds for investors seeking a balanced combination of stable income, potential capital appreciation, and exposure to a resilient business. Company overview. Background and industry position. Johnson & Johnson is a multinational corporation established in 1886, recognized globally as a leader in the healthcare sector. The company's operations span two primary segments: innovative medicine, medtech. Although its consumer health business Kenvue was recently spun off, Johnson & Johnson maintains a dominant position in its core areas through extensive investments in R&D and strategic acquisitions. Selection rationale. Johnson & Johnson was selected for analysis due to its alignment with criteria for an American public company that issues both dividend-paying stocks and bonds. Its status as a dividend king and rare AAA credit rating make it exemplary for demonstrating comprehensive equity and fixed income valuation methodologies. Diversified business model as risk mitigator. Risk reduction. J&J's diversified structure across multiple segments provides inherent stability and significantly reduces reliance on any single product line or market segment. Financial stability. This strategic diversification drives consistent financial performance, reliability in dividend payments, and its elite AAA credit rating. Segment balance. Unlike companies heavily reliant on a single blockbuster drug, J&J's revenue streams are spread across multiple therapeutic areas and product categories. Market buffer. This broad base acts as a buffer against specific industry headwinds, such as patent expirations or regulatory challenges. This diversified model is a significant qualitative factor contributing to J&J's low uncertainty rating by Morningstar and its AAA credit rating, implying a reduced risk profile for both equity and bond investors. Stock performance and recent momentum. As of July 16, 2025, Johnson & Johnson stock was trading at $162.98 on the NYSE. The shares have demonstrated strong recent momentum, surge of over 6% in recent trading, approximately 14% appreciation year to date, still trading nearly 16% below its all-time high, indicating potential for further upside. This positive movement was catalyzed by a robust second quarter 2025 earnings report, where the company surpassed analyst expectations and subsequently raised its full-year financial outlook. J&J's recent stock performance demonstrates market confidence in the company's strategic direction and financial health, providing a strong foundation for potential future appreciation. Dividend profile. A dividend king. $5.20 annual dividend per share, with quarterly payments of $1.30, 3.35% current yield, higher than S&P 500 average and healthcare sector average. 54.76% payout ratio. Sustainable ratio, allowing for reinvestment in growth initiatives. 63 consecutive years of dividend increases, earning dividend king status. Johnson & Johnson's exceptional dividend track record underscores the company's unwavering financial discipline, consistent P/E profitability, and deep-rooted commitment to delivering shareholder returns. Dividend growth as business health indicator. The consistent and long-standing dividend growth, evidenced by J&J's dividend king status, extends beyond merely being a shareholder-friendly policy. It serves as a robust indicator of the company's fundamental business health, sustained profitability, and effective capital allocation strategies. Achieving over 5 decades of continuous dividend increases requires extraordinary financial resilience. This implies that Johnson & Johnson consistently generates strong and growing earnings and cash flows, even through various economic cycles and industry shifts. This level of consistency is only possible with strong market positions, efficient cost management, and a successful pipeline of products. For investors, it signals an exceptionally high degree of predictability and financial resilience, positioning Johnson & Johnson as a highly reliable income-generating asset. This table highlights J&J's attractiveness as an income stock due to its high yield and sustainable payout ratio, and its significant scale within the market. Provides a foundational reference for the entire equity valuation, allowing for a rapid grasp of the company's size, income generation potential, and commitment to shareholder returns. Fixed income analysis. Non-callable bond identified bond through comprehensive review of available fixed income data. The Johnson & Johnson bond with CUSIP 478160AJ3, designated as the Johnson & Johnson 6.95% bond maturing on September 1, 2029, has been identified as meeting the requirement for a non-callable bond with a future maturity date. Credit rating implications. Johnson & Johnson commands an exceptional AAA credit rating from S&P Global Ratings, reaffirmed with a stable outlook on April 25, 2025. This is the highest possible credit rating, signifying an unparalleled capacity to meet financial obligations and an almost negligible level of credit risk. For bond investors, an AAA rating translates into an extremely low probability of default, positioning Johnson & Johnson bonds among the safest corporate debt instruments globally. This superior safety profile inherently leads to lower yields compared to bonds issued by. The non-callable feature is paramount as it shields the investor from call risk, guaranteeing the stream of coupon payments until the bond's stated maturity date, irrespective of future interest rate movements. This feature adds significant value to the investor's portfolio. The safety premium in bond yield. Superior safety. J&J's AAA rating represents the highest possible credit quality, indicating minimal default risk. Non-callable protection. The non-callable feature eliminates reinvestment risk for bondholders. Scarcity value. Johnson & Johnson is one of only 2 companies in the world with elite credit, creating high demand. Lower yield acceptance. Investors willingly accept lower yields in exchange for unparalleled safety. The observed lower yield of J&J's non-callable bond, compared to the broader U.S. corporate AAA effective yield, represents a safety premium that the market assigns to J&J's unique financial strength and the advantageous non-callable feature of its bonds. Stock valuation. Quantitative analysis. Key valuation ratios. To assess J&J's stock valuation, we examine key financial ratios. Current P/E ratio, approximately 17.2. 23% lower than J&J's 5-year quarterly average of 22.3. 13% lower than its last 4 quarters average of 19.8. Current price-to-book ratio, 5.58. 18% less than its 5-year quarterly average of 5.8. 6% less than its last 4 quarters average of 5.1. Industry comparison. Benchmarking against relevant industry averages. Drug manufacturers. General sector weighted average P/E, 24.41. Pharmaceuticals industry average P/B, 4.60. Stock valuation assessment. Undervalued P/E ratio analysis. J&J's approximate current P/E ratio of 17.2 is significantly lower than the drug manufacturer's general industry average of 24.41. This substantial discount suggests that J&J's stock is currently undervalued when evaluated on an earnings basis relative to its direct industry peers. P/B ratio consideration. While J&J's P/B ratio of 5.58 is higher than the pharmaceuticals industry average of 4.60, this premium is justified by J&J's qualitative strengths, company's wide economic moat, and low uncertainty rating from Morningstar often justify a premium on book value. Fair value estimate. Supporting the undervaluation thesis, Morningstar estimates J&J's fair value at $164 per share, with the stock trading approximately 4% below this estimate. Considering these factors, particularly the significant discount on its P/E ratio compared to the industry average, the positive recent earnings performance, and the raised outlook, Johnson & Johnson stock is assessed as undervalued. The chart visually demonstrates J&J's significant P/E discount relative to industry averages, supporting the undervaluation thesis. While the P/B ratio is higher than the industry average, this is justified by J&J's superior quality and competitive advantages, which allow it to generate better returns from its asset base. This P/E discount presents a compelling investment opportunity as the market may be underestimating J&J's future earnings growth potential despite recent strong performance. Bond valuation. Quantitative analysis yield analysis. The Johnson & Johnson 6.95% bond maturing on September 1, 2029, which is non-callable, offers a yield to maturity of 4.05%. This YTM represents the total return an investor can expect if they hold the bond until maturity, assuming all interest payments are made and reinvested at the same rate. Benchmark comparison. To assess valuation, we compared J&J's bond yield to prevailing market rates. U.S. corporate AAA effective yield, 4.9% as of July 16, 2025. Moody's seasoned AAA corporate bond yield, 5.46% for June 2025. The BofA Merrill Lynch rate is more recent and specifically an effective yield, making it a more direct comparison to the Johnson & Johnson bonds YTM. Bond valuation assessment. Properly valued yield comparison. J&J's non-callable bond yield of 4.05% is lower than the current broader U.S. corporate AAA effective yield of 4.9%. Premium justification. Given Johnson & Johnson's exceptionally rare AAA credit rating, a distinction shared by only one other company globally, and the inherent investor protection provided by the bond's non-callable feature, the bond is considered properly valued. Market pricing. The lower yield relative to the broader AAA average is a direct reflection of the market's willingness to accept a lower return in exchange for unparalleled safety, liquidity, and the certainty of income that J&J's debt offers. Investors are essentially paying a premium for minimal credit risk and complete protection from reinvestment risk. While a higher yield would indicate undervaluation, the current yield accurately reflects its premium quality and the strong demand for such secure assets in the fixed income market. Bond yield comparison. The chart illustrates the safety premium investors are willing to pay for J&J's bonds. The lower yield compared to benchmark AAA corporate bonds reflects the market's recognition of J&J's exceptional creditworthiness and the value of the non-callable feature. This yield differential is not an indication of undervaluation but rather a precise market pricing of superior safety and structural advantages. Investment recommendation. Stock over bonds for an investor with a long-term horizon and moderate risk appetite. Seeking a balanced approach combining stable income with meaningful growth potential, an investment in Johnson & Johnson's common stock is recommended over its non-callable bonds. Capital appreciation versus capital preservation. Stock advantages. Currently trading at P discount, implying significant upside potential. Identified as undervalued by Morningstar. Dividend is substantial and consistently growing. Can appreciate from both earnings growth and potential valuation multiple expansion. Provides a hedge against inflation through growing earnings and dividends. Bond advantages. Premiumly safe with AAA rating. Properly valued for that safety. Provides predictable fixed income. Non-callable feature eliminates reinvestment risk. Limited price volatility compared to equity. Conclusion. Financial standing. Johnson & Johnson maintains an exceptional financial position, distinguished by its status as a dividend king and its rare AAA credit rating, solidifying its unique position as a high-quality investment vehicle across both equity and fixed income markets. Valuation assessment. Johnson & Johnson stock is currently undervalued, presenting a compelling opportunity for both capital appreciation and a robust, growing dividend stream. Johnson & Johnson bonds are properly valued, accurately reflecting their unparalleled safety and non-callable benefits. Investment recommendation. The analysis favors an investment in Johnson & Johnson common stock over its bonds, driven by its superior balance of income generation and growth potential, and its overall favorable risk-adjusted return profile within the prevailing market environment.